is concerned. That's the view coming in from Anand Rathi as well. But let's move focus then to the auto space. The Federation of Automobile Dealers Association in their report last month suggested that the worst may be over for the auto industry, but the latest report that we got for the just yesterday makes it quite clear that we can't expect any sort of a drastic turnaround as far as the auto sector goes, at least not anytime soon. So the overall consumer sentiment does remain weak, and of course inventory levels are persisting at very high levels as well. Let's bring in Vinkesh Gulati, the Vice President at FADA, to get a sense of all the factors that are contributing to the slowdown that's continuing in the auto sector. Vinkesh, welcome to the show. And the report that came out last time did point to the fact that there's a lot of concern, a lot of environmental concerns persist for the auto space. Liquidity is quite tight, financing remains a concern, and inventory levels are extremely high. But that said, there was this tone of optimism, and that's perhaps something that at least led to a rally in the auto stocks at any rate. But the latest report really does show that things don't seem to have changed much. Inventory levels are pretty much the same. Registration numbers too are lower than last year. How weak is the demand still?
The demand is weak, and we don't see a very good upturn in the coming 2-3 months also. And the election time is also is a point where the demand is not happening, and I feel whatever will happen if there is a good monsoon. We'll see some positivity after the monsoon and not before that.
All right, so the monsoon then becomes the next key trigger to watch out for as far as auto demand goes. Talk to us about inventory levels, because this also continues to be between that 40 to 50-day range as far as segments go, and this is across segments. Despite a production cut that's come in by automakers, when will we see inventory levels easing? What are the kind of discussions that you're having with OEMs?
So we are into discussions yet, and we are still starting discussions with some OEM, but I feel this year is a very, very volatile year, and there are a lot of disruptions happening now. 1st July, again the airbags thing, and then the thing coming in BS6. So I don't see a lot of support from OEMs and inventory, because they are not here very receptive on that. But yes, the dialogue is on, and like December and March, they did help dealers in reducing the inventory. We feel maybe with the dialogue in another 2-3 months, we may find some support coming in.
All right. So how would you say then, the liquidity situation is looking at the moment, if we talk about both from the customer side of things as well as dealers, at least based on your survey?
So liquidity is a bit tough. The NBFC situation, what is there, is creating a problem. The customers are not able to get the maximum finance which we used to have around a year back or 8 months back, and that is actually working negative to the retails also. So I'm not saying there are a lot of customers who are not getting finance, but the finance in the market is not that easy as before. So that is also one of the reasons where the negative growth we are able to see it's continuing still.
All right. In fact, based on your report, about 39 of the dealers that you surveyed say that the situation is fairly bad as far as liquidity goes. Help us really understand what this means then for the industry. If we talk about the next few months, the next 3 months or so, near term, is there any anticipation that things will ease on the liquidity front? We've seen, the RBI step in, for example. Has that had any sort of a positive?
I'm sorry, I'll be able to say that there is something positivity coming in the coming 3 months, but yes, obviously I'm looking positivity in the festive seasons, starting from Ganpati in September, then the Dhanteras and marriage season. So September, October, November, we can still hope for some positivity to come in, but not before that.
All right. The other factor, of course, is the entire election that is ongoing. The industry had taken the elections into account for some of the uncertainty and, of course, the drop in demand. But, in your assessment, would you say that is the only reason that dealers, are not really seeing the kind of pickup that they need to? And how long then, really, is what I'm trying to understand, will this slowdown continue? Can we expect it to be status quo at least for the next, 6 months?
So I feel election is one of the factors. So the slowdown is happening because of a lot of things in the market, and you know that the economy is not in a very positive mode. The customer sentiments are also not that good. So election obviously has put it to standstill. And once the verdict is out and what is the government which is coming in, so it will take another month or two to settle in what will be the future of the government and how they take to the business community. So I feel yes, we are not seeing any growth happening before the festive season, and this year will be not a very big year on the growth side for the auto industry.
All right. Are there any segments, or rather any models, any new launches that are actually seeing any positive traction that are doing well currently? Any green shoots that are being spotted as far as trends are concerned?
So green shoots are there, like if you talk of Mahindra HCV 300, which was launched just 3 months back, they are still doing wonders. Venue is coming over and it is creating a lot of hype. So these are the two products which will have the growth, but the degrowth what there is happening in the other products, I don't feel the new products which are launched will be able to cover up those degrowth. So overall industry will see the degrowth going in. But yes, the companies who are launching a new product, and if that product is accepted, so they'll have some positivity, so their market share will go up. But overall, it won't be able to expand the industry or have the overall industry growth.
All right, CV vehicles is a space that I do want to discuss with you. CV vehicle registration showed a recovery in the last month. It was higher. It's a marginally higher, just about 2% growth year on year. But still, some amount of good news. Does that mean that, we should expect some kind of a recovery as far as the CV segment goes?
So actually, if you talk from our side, the CV growth is declining month on month. So it's as compared to all the other categories, yes, it's a positive thing. But on the overall, it's a negative because it was showing two-digit growth if you check from the September, October, November, December things, and it's come down to a single-digit growth. And I feel similar, or it will even go down, because CV market is also seeing the problems of NBFCs and the retail issue and the sentiments.
All right, how then are discounts looking at the moment, particularly commercial vehicles, because we're discussing that. On the ground, how are CV discounts looking, and are deeper discounts helping growth in any way?
So CV discounts are similar to what was there before, but as of today, the discounts are not helping the market. The customers are still waiting for things to go better, economy to go better, and purchasing power to go better. And the current discount level, even if increased, I don't see any positivity because of that.
All right, fair enough. We leave it at that. Things are looking fairly dire, it would be fair to say, as far as the auto space goes. We can't expect, any sort of an immediate turnaround. The financing side of things in particular has to ease up for that to happen. But we are seeing some green shoots. We need to, of course, keep an eye on how the action pans out. The monsoon will be very, very critical. We'll have to see how things move beyond that. Thanks very much for you coming in from Venkesh Gulati of the FADA that has come out with the latest report pointing to the kind of slowdown that's persisting as we enter the new financial year as well. In fact, if you talk about some of the key factors that have been thrown up by this report, all vehicle categories have registered a shrink. Overall consumer sentiment remains weak. Dealer inventory also continues to remain fairly high, and there's no substantial reduction that we've seen in inventory across segments. They've strongly advocated, as far as FADA goes, a 21-day inventory for sustained dealer viability, but at the moment it's closer to about 40 to 50-day levels. So that's something that definitely has to be brought down. Remember, this is in spite of many of these producers actually bringing down their production at this point in time. So definitely seeing pressure as far as the auto space is concerned. Well, let's put the spotlight then on the macro front. Industrial production numbers for the month of March expected to be in the range of about 0.5 to 2%. That's a fairly broad